Well, so there's basically a four kind of phased approach with respect to the planning. The first thing you're going to want to do is conduct an impact analysis. So you want to take a look at exactly where we stand now with respect to GST and what that means moving forward to the HST. So what we're basically running into is that the HST, the Ontario Harmonized Sales Tax, will basically represent a supersized GST. So what we're paying 5% tax on now, we'll be paying 13% tax on going forward. So the first phase is understanding how this is going to affect us as a producer, and certainly the most obvious of which is that where we were previously able to claim exemptions on the provincial sales tax of certain inputs, those will now be subject to GST. If they're subject to GST, they'll be subject to HST at 13%. So there will be a bit of a cash drain with respect to the transition to HST. So that's the first phase, is understanding what we need to do. The second phase revolves around developing a strategy to deal with that. So understanding that there may be a cash drain that exists and taking the steps to kind of mitigate that cash flow issue. So one of the things that we can do is, if we are an annual filer for GST purposes, we may wish to speed up our filing process, because that if we voluntarily go quarterly or monthly, then that should mitigate a lot of that cash drain that might exist with respect to HST. So that's the two big phases, would be understanding what it does for us, developing a strategy to deal with it. The third phase would be training anybody involved in our process to deal with it. So depending on the size of our organization, if we have individuals in the AP or AR billing functions, they need to know how to deal with Ontario HST and know when to charge it and potentially when not to charge it. And finally, the fourth phase would be a post-implementation review. So once we get past July 1, once we have all that time invested in understanding how it's going to affect us, we basically should do a review afterwards to see how our actual fill out versus expectations.
Okay. So now I want to get a bit more specific in a couple of key areas.
Okay, sure.
First of all, real estate. I'm buying a farm. How is this going to affect me?
So with respect to real estate then, commercial real estate deals that are currently subject to GST at 5%, those would now be subject to Ontario HST at 13%. But that being said, if they're used in commercial activity, the same kind of thing goes, where we're able to recover that amount of tax paid as an input tax credit, or it wouldn't get charged depending on the nature of the real estate deal. It basically works out that if we're entitled to a full input tax credit on that, then administratively it shuffles out that it would get shown on the purchaser's side as a taxable sale and the corresponding input tax credit. So at the end of the day, provided the property is used in commercial activity, it really shouldn't impact us, because we'll recover it as an input tax credit.
Input-wise, regular crop inputs, how is that going to affect me?
So regular crop inputs should remain largely unchanged with respect to the tax status. So if it's subject to GST, we should anticipate paying HST on that supply. If we are not paying any GST on it, if it's zero rated, then we would expect that to continue forward, and essentially just wouldn't be paying the 13% tax. It would still be zero rated, and we'd be paying tax at 0% is effectively the way it's done.
Looking at this now, it doesn't appear to be like it's going to be more expensive for a farmer.
No, that's right, and so the Ontario government suggests that Ontario's farmers will realize significant savings through the introduction of Ontario Harmonized Sales Tax. Reason being that it opens up the door to claim input tax credits on that provincial portion of the tax that was previously not available to be claimed. So in cases that we were paying PST on our supplies, that represented an additional part of the cost to us that we weren't able to recover it, and so it got built in there. So moving to Ontario HST, certainly the most significant benefit to Ontario's farmers is that it opens up that availability to claim back any of that provincial portion on our equipment, on our computers, that sort of thing, used in commercial activity. We can now claim that provincial portion of the tax back as an input tax credit. And in addition, I guess that the Ontario government points out that a lot of Ontario's farmers will be eligible for the small business transition credit that's available, and will be eligible for the individual transition credit.